In life, we all have dreams and aspirations. In life, we all have dreams and aspirations. Yet, we also encounter challenges that can make our journey uncertain. But here's the secret to living a life worth living. It starts with a vision, it starts with a plan. It begins by crafting a plan, not just for your life, but also for your money. This is where financial planning steps in, a strategic process designed to guide you through life essential aspects. It's about maintaining financial health, making wise decisions, and using your resources to create a life you truly value. Financial planning empowers you to achieve crucial life goals while preparing for major milestones. It's a process that gives birth to your financial plan, a roadmap to navigate your savings, investments, and dreams, such as getting married, starting a family, ensuring security for your loved ones, facing unexpected financial hurdles, securing your children's education, and ultimately achieving your own financial freedom. Proper financial planning is an ongoing journey. When you work with a licensed financial planner, you gain confidence, insights into your financial health, and clarity on your life goals and priorities. Let's embark on this journey together, start planning for a better life today, and create a secure tomorrow.
Hi, good afternoon. Thank you for joining us. So today we're going to discuss about rising insurance premium, what we can do about it. Right. So I'm sure that recently we have received some notification from the insurance company about increase of our insurance premium. So have you received any notification from the insurance company?
Yes, of course. I already received the repricing letter from insurance company last week.
Oh, okay. From last week. How about you, Bing?
For myself, actually quite a few months ago, I received it.
Well, that's
Yeah.
very early, right? So yeah, some of us may have received the notification from the insurance company, notify us there's an increase of our insurance premium. So and you may wondering what any increase of the premium and what should you follow or opt in with the advice that the insurance company provide, or you just maintain of the insurance premium that what you have now, or what's the impact if you don't agree with the option that given by the insurance company. Without further ado, let us explore this topic. Yeah, everyone knows that the inflation rate will cause our standard of living increase, right? So does our medical costs as well, right? Medical costs also have inflation. I'm sure that everyone know about that. What make it there's a inflation trend is because of the rising of the medical costs. Do you know that the increase of the inflation of the medical costs is about double digit? And Malaysia healthcare benefit costs in 2022 are projected to be 16.2%.
Wow.
Yeah, and Malaysia was ranked number two, right, in Asia in terms of medical costs. That's really high, right? So, but first of all, what is medical repricing, which is your premium insurance increase of the premium? What is that? So, medical repricing is the revision of your premium insurance charges by insurance provider due to rising of medical costs. Yeah.
Thanks, Vivian, for explaining what medical repricing is. So, I will ask you is that other than the increase in medical claim that in the past that caused the insurance company to adjust or reprice their premium, so what do you think of other factors that can cause the insurance premium to be increased?
Yeah, even I do some research on that, right? According to Economy Outlook of 2023, a report released by the Minister of Finance Malaysia, the Department of Statistics of Malaysia, observed that Malaysian aging population is growing at a faster than expected. Whereby more than 15% of the population will be above the age of 55 by 2050. that causes it to be impact on one of the factor. People are living longer. It means that they are growing healthier, right? Because they will take care of their health as well. As a result, with growing health risk, it may lead to medical attention. Right? That is part of it, part of the factor that that factor that cause the repricing of the insurance. Yeah. The increase of our health services, meaning that people will live longer, then we may need a better advanced medical health care on that part. Yes.
Then, do you have something to add, Wenbing?
Actually, apart from what Vivian has shared, another one factor that I can see and I know that is the increase of the benefits under medical card. So, like for example, long time ago, our medical card does not have this alternative treatment benefit. So what this treatment is like chiropractic, acupuncture, physiotherapy, right? And now, if you look at the new cards nowadays, they include this benefit. So another example is also long time ago, our annual limit for medical card is what, just 50,000, 100,000, 200,000, and when it comes to lifetime limit, it is there's a limit there, or lifetime 1 million, 2 million. And when we focus nowadays, the medical card, the annual limit is often over 1 million ringgit. Plus also for the lifetime limit is unlimited. Maybe another example is also on critical illness. Last time, our critical illness only covers the end stage, the late stage critical illness, and covers 36 types of critical illness, which I think most of us are aware about. Then now, the insurers have also increased a variety of insurance coverage, and then they launched the early critical illness, where it covers the early stage, intermediate stage, and the late stage critical illness. And these type of stages, I think it goes up to over 200 types of conditions now. I mean, they cover.
That's a lot, right?
Yeah. So as you can see, all this, right, it indirectly increases the premium for the medical card. Right? And next, when it comes to claim ratio, previously I have attended quite a few number of briefings by insurers explaining why they need to increase their medical premium. And the main reason is on the claim ratio. So for past few years, they have noticed that there is a steadily increase of claim ratio in their medical cards, meaning that also it means that many people are claiming right now, and perhaps also it can show a little insight into the Malaysians' health generally. Right? Malaysians are claiming much earlier, and also in also how's that say much much earlier, and also in terms of the claim amount is also bigger and bigger. Right? So that signifies probably a drop in the Malaysians' health in that context.
Okay.
Yeah. So yeah, I think that is what I want to add on for such people I mentioned.
Okay. Thanks, Wenbing, for the add-on for his insightful this information. So what we can understand is that the concept of insurance is actually a risk sharing. So everybody contribute a certain money or a portion of our money into a pool fund, and then this pool fund will be then to cover medical expenses of any members that who need it lah. So if the medical expenses increase a lot than the expected, then the insurance company will have to readjust the pricing so that everyone will still continue to enjoy the benefit, insurance benefit, or the coverage that we need without any disruption.
Yeah, okay, yeah. Thanks even for wrapping up. So even how often does medical repricing happen?
Like what Vivian mentioned earlier, medical inflation in Malaysia is about growing at double digit. I mean, it's quite high, especially every year. Then medical repricing usually happens can be very depending on the specific health insurance plan and also the terms and condition that is set by the insurance provider. But typically, insurance company will review their medical pricing on an annual basis to ensure that all the insurance costs and the expenses can be covered by the total premium contribution. However, some providers may do this more frequently, especially those premium were very cheap to buy in the past years lah. So while others providers may have longer interval between repricing, means that probably repricing issue can happens 4 5 years once.
I see. Okay. Then question to Vivian. What are the impacts of medical insurance repricing to policyholders?
Being here are a few factors here. So, like financial constraint, right, putting financial pressure on the policyholder, meaning that you have to increase on your premium. It may lead to higher money commitment and budget constraint on that. And second one will be reduce on your coverage. If you choose to opt out, right, and remain the same, it will reduce your coverage, right? Gradually it will lead you to very vulnerable to hire out from your pocket just to pay for the medical treatment as well. And third one will be impact on your retirement planning, right? Because especially for the investment plan, right, once an increase on premium, it may reduce on your investment return. Investment account, right? And it will affect on your long-term planning, financial planning, and your retirement planning as well. Then the other one will be rising or deductible and co-payment on that part as well. With the rising premium, the policy holder may need to opt into with much higher deductible or co-payment, meaning that they will need to pay more from the pocket just to get the medical treatment for this. So all this will be impacted on one few of the factors that impact on that. Yeah.
I see. Okay. Thank you to Ewan and Vivian for sharing. So based on Ewan's reply, I would summarize that medical repricing in Malaysia occurs quite frequently also for most medical insurance plans, and with adjustments aiming to align the insurance cost with the premium contributions. Right? And for the impacts that have been shared by Vivian, the first one is it will place financial pressure on policyholders.
Yep.
Right? And second is a reduced coverage. If the policyholder reduce coverage, then it may leave the policyholder more vulnerable to external shocks. And the third one is impact on the retirement fund, because when you have to pay more to your policy, then you have lesser cash to save for your retirement. And the final one will be the rise of deductibles and co-payment, where policyholders may need to share a bit of money when they admit to hospital or use hospital services in the future.
So, Wenbing, what are the options that policyholder can take?
This one will depend on the respective insurer, because the respective insurer will provide the policyholder some options. Like first option is to remain the same benefit, which means that the policyholder follows the recommended premium increase that given to them. And second is the policyholder can actually look at rider, which is like reduce or remove certain rider. For those who are not too sure what rider means, like under the insurance, the term rider is, maybe I talk in layman term. Imagine that you buy a set meal and there's a basic meal, right? Any other dishes that you put on, there are the toppings, and these toppings are the riders. So in order to provide more benefits and more coverage for you, you purchase an insurance policy and then you add on rider to your policy. So these riders will be critical illness, medical card, hospital income, personal accident, and many others. So maybe I give one example. One of my clients received a notification to increase his insurance premium, and the recommended amount is 60 ringgit a month. So for him, if he follows the increment, then all is well. But if he do not have a budget to cope with this increase, then he will have to reduce some of his death benefit, or even some of his critical illness that he has taken on earlier. Yeah. So all in all, I think these are the types of options that the policyholders can take.
Yes, I think it would be better to review your current insurance coverage and assess whether or not there are some riders you can reduce or remove or add in to make sure that your coverage is aligned with what you need right now lah. So like for example, like what you said, like you might want to consider cancelling some of the rider like hospital income or hospitalization benefit rider. This could be unnecessary for those like employed, but it's quite essential for those like freelancer, contract workers, gig workers, or even self-employed, because once they stop, like for example, once they hospitalize and then they cannot go to work, so then their income stop, then probably this hospital income rider could be a way of income replacement for that particular day, the income they have lost.
So means that we are on risk as well because we are now self-employed. Right.
Then another option is that you can opt for deductible plan, because in many years ago, I think our insurance plan, before we upgrade our insurance plan, we used to like have co-payment, the deductible 300, and then there is a max cap of like 1,000 or 2,000, which is quite affordable for everyone. So some of the like the medical plan, they have deductible, you can choose lah. Probably 300, 1,000, 2,000, depending on your needs. So another option that is also worth considering is that you can switching your investment link policy from an annual payment to a monthly payment, because this approach has two advantages. First is it allows you to do dollar cost averaging, because investment is you can buy more units when the market is down, so you have more units in your insurance policy. So second thing is that you can more easier to keep track of your insurance payment, and also you will be making smaller and more manageable monthly payments instead of one lump sum every year. So Vivian, I think if not mistaken, previously you have mentioned
Yes.
you mentioned your decision to maintain your insurance premium last time. So I'm just curious about your experience with this choice, and then could you share more on this experience?
The product that I have is actually a medical plan. It's an investment link. One day I received a notification from the insurance company saying that it's time for you to increase on the premium. But my option I choose that time was like maintain. I annoyed everything, but in long term I saw it. The sustainability there is no longer can sustain me until the age I supposed to to have, which is up to 80. It seems like it cut shorter, it up to like 60 only. That's the risk I have to take. So since then I realized that is whenever the advice from the insurance company to increase on the premium, so I will take the option to just to top up on the premium of the insurance. Yes.
Then have you encountered any scenario where you face a significant increase in premium in your repricing?
Yes. As everyone know that my age is like in the late 40s, right? So when they say that, hey, you have to increase, it means that you have to increase like up to 50% of my premium. So that made me like, wow, 50% means that I have to do some budgeting and even some expenses so that I can fork out from my pocket to just pay for the 50% of the premium. So this is the part that I did previous time. So now I learn from there. So it's important, to realize that the importance of sustainability of your insurance premium. Yep.
Okay, thanks Vivian for your experience sharing. So I think let me summarize what we have discussed so that the audience can have something to consider about their own decision. Your own decision to whether or not to to do something about your medical repricing lah. So basically 3 options will be given to policyholder. So number 1 is to remain the same premium that you are paying. but subject to the policy sustainability. So second would be to follow the new recommended premiums suggested by the insurance provider. So third would be making a necessary adjustment to whether or not to reduce or to remove some of the riders, or probably you can add in some of the new riders that can match with your insurance needs, okay? Or even consider a deductible plan if your budget is really, really tight. But anyhow, before making any necessary adjustment, do take note that do discuss with your insurance provider or financial advisors to ensure that this adjustment is aligned with what you need without disrupting any of your, what this benefit you should enjoy lah. So because we also want to avoid removing some of the key insurance benefit that are necessary and potentially placing ourselves into difficulty also. So when we speaking of in the view of personal finance, what we can do to manage all these rising insurance premium?
Okay, personal finance. Right. So when insurance premium increases, it is not something we can avoid entirely. So besides finding ways to adjust in the policy insurance itself, a good thing is also we look at our more into our things that we can control. Also, is our cash flow, budgeting, and also income expenses. You can calculate by including this premium increase, how much would it affect your budget and your cash flow. Right? And with these increases, would you be able to identify anything in your budget that you can reduce slightly to cope with this insurance increase? Next section is, I think some of you mentioned about policy review. Why? Because most people, when they bought insurance quite a number of years ago, when they come to today, right, they are not too sure what they have bought.
Yes.
And according to my own experience, when I reviewed with many of my clients on their insurance policies, I often found out that they have overlapping benefits in their insurance policies, which means that they have the same benefit and then yet they are paying extra money for the same benefit. So what you can do moving forward is find out if there are any similar benefits, identify it, keep those that are necessary, remove those that are you have bought like double or triple times, and hence you will have a reduced insurance premium. When you have reduced insurance premium, then your cash flow will increase. Right? So when your cash flow will increase, you will have the more flexibility to cope with any increase of insurance premium in the future. So besides that, while you have additional cash flow, you can also channel to your goals, financial goals, such as saving for retirement, and or even buying something that you have delayed for a long time, like your phone you did use for many years, and because of this policy review, it has enabled or given you some extra cash every month. So you can use this money to buy certain gadgets to replace what has already been going to be faulty or equivalent. Yeah.
Okay, thank you, Wenping and Ewan for sharing all the tips and also the things that impact if we wanted to when come to an increase of the insurance premium. So and one more thing before we wrap up everything to go to Q&A, there's one question that a person that I know on LinkedIn, he was asking whether is it forced that we have to follow whatever the insurance company requested us when it comes to increase of our insurance premium. Maybe Wenping, you would like to answer this? Maybe even.
I think okay, first review the current insurance, existing insurance coverage first. So like let's say this person has already transitions into a next stage of life, like for example from single to married. Okay, so in this kind of scenario, probably your responsibility will become bigger. So the things that you need to cover also become higher. So probably you can consider to increase your life
for the insurance
for
coverage.
the insurance
yeah,
coverage.
yeah. So what he meant is like whether to follow the insurance company to increase on the premium on that part. So what we can see that is optional, like whatever insurance company are given to us, whether we want to opt in or whether we want to maintain. So it's up to you. Like what you say, you have to look at your life stages as well. Whether you wanted to increase on that part, what riders, what we need to maintain on that.
Let me share one experience that I have reviewed one of my clients in the past few years lah. So at that time, my clients had facing financial difficulty because during the pandemic things. So what I do for this client is that I review her cash flow first. So even though she already received the repricing letter from the insurance company, but the her cash flow doesn't allow her to pay more, So what she did is like what you did lah, maintain the same premium that she's paying until this year. Okay, when her job is more stabilized, so she top up premium. So it could be extra another 50 ringgit or 80 ringgit every month, just top up. So that in top up into an investment premium, so that this investment premium can buy more units in the policy to accumulate more units in the policy cash value, just to cover the insurance cost and also extend the policy sustainability.
Okay. So meaning that we still have the option.
Yes,
Maybe it's not now. Maybe in the future when your financial is more stable, then you can do that by topping up all the.
Yes, correct.
Right.
But don't remember that if you are unable to do it right now, then do remember next time you have to do it.
Yes.
So
yes.
it is sooner or
Yeah.
later, unless that you make some drastic action in your policy, like reducing some benefits, then it will actually lower the cost of insurance over time. But if everything remains the same, it is important that you recognize this, and then if you are able to, and well, maybe when income increases, then allocate a portion of it to your insurance policy in the future.
Yeah, just like what happened to me. So now I realize it. Now I'm topping up on my premium on that part, so that my sustainability of my insurance coverage will be much longer than the previous time. Yes. So now we come to Q&A session. So any question from the audience, you can just drop us a message here and then we will answer you. Okay. So now we have a few questions here. Wow, yeah, this is direct to Woon Bing. Would this increase of premium continue in the future?
Okay, so would this is a question that is usually asked by many of clients. I think all of our clients. Will insurance increase in the future? The answer to this is the future insurance premium is influenced by many factors. For one is the economic conditions, the healthcare costs, and the regulatory changes that happens in Malaysia, and perhaps also the performance of insurance company. While it's difficult to predict with certainty whether future will increase or not, but we can see the past trends for decades. It has been rising steadily. Right? So to prepare for this potential increase, it is advisable to review your policy, right? Maintain financial flexibility. That you have to keep this in mind. Right? You need to be flexible to cope with any sudden shocks that
unexpected
events or shocks that may have come into your life, especially related financial thing. And also you may consult with a financial professional to prepare yourself for the future. Another thing that is important is also be proactive when managing your finances. Always see what is the next step or what could happen in the next few years, and this can guide you consciously on your today's action. Your today's action will help you to cope better with future unexpected events.
Okay.
And then some of my friends also asking, like how often should we review our life insurance policy?
Yeah, normally it will be good that you can review it 3 to 5 years. on that part, this can be time when the refresh on your what you have purchased like previous time. Like what I did, like when I bought my policy, my first policy, I was like just in my 20s. So my life changes. My life stage at that time is single, but when I get married, I have children. So life changes will be changes. My insurance need will be different again, and the other thing will be changes in financial situation. So maybe in the 20s, I just started to work. I don't have much of the money, and I can only like maybe I can get this premium or coverage from that part. So in the life stages changes means that maybe my need is different. So I can have since I have the financial stability, I can afford to buy another one just to cover for my needs on that. And the other one will be health changes. Maybe in the 20s I'm much more healthier, but now I'm 49, means that I have to be like maybe I have high blood pressure, cholesterol, all this, so things will be different again. And yeah, so it's good that you can review it 3 to 5 years along the journey on that part. Yeah. So another question. Maybe Humping, you can. This question is direct to you, Humping. Okay, how can I prepare for potential premium increase in their medical insurance plan?
Okay, yeah. Actually, the answer to this question is a bit similar with the first question. Then, but anyway, it's asked by a different person. I have to address also. I think that the first step is to acknowledge that this might happen. That this is very very good mindset, right? So you start to prepare for it. Right? Second thing is I mentioned earlier, also do policy review to find out if there's any overlapping benefits, and also you can check with your agent or in your portal, in your agent portal, when is your what is your sustainability? Right? So if you have previously you have chosen your sustainability until age 80, and then maybe few years later you found out, hey, your sustainability dropped to age 70.
Just like me, like.
Yeah. So in this way, it can help you to prepare for what is coming, which means that you may actually get a letter from the insurance company that you need to adjust your premium, revise premium, in order for you to be to pull from age 70 to age 80 for the sustainability. Yeah. And the third step is of course to review your budget, do a annual budget. It's a good practice to do it so that you know where is your money going to and how much can you save, and there are many other components under budget. And the first thing is of course to seek also professional advice. If you are lost, it's okay, you are not alone. There are many financial professionals out there that are happy to help you, where they can share with you what are the things that you may not know also. Right? And this can help you to make informed decisions moving forward.
So there's a question for Evan. Should I top up my premium even though company didn't ask for increase? So what is your suggestion? The audience is asking you.
Top up premium.
Yeah.
I think top up premium is a proactive initiative that can have both benefit and also consideration. Of course, this strategy typically applies to investment-linked policy because the premium that we are paying every month, they have two types of premium. Like one is the investment premium, the other one is the insurance premium. So insurance premium is where this is the regular fee that we are paying to maintain our insurance coverage and also benefit, and mostly determined by our age, our health conditions, and also probably family history. But the other one, investment premium, that we pay is to where we pay additional money to buy more investment units and bolster this cash value, and then eventually this investment value will grow over the long run. So probably this probably can help you to cover some of the costs, your insurance costs in the future, which is also good. I think it's a very good idea to those who want to top up your insurance, top up your premium more. But however, on the other side is that you have to measure your affordability, whether or not you can comfortably to make extra payment without disrupting any of your other financial goal or any other like funding for other goals. So top up premium can be very I mean,
With such a different.
yeah, very hard to justify, but you can top up any amount that you like, okay, based on your affordability and budget. It could be extra 20, 50, 100 or more.
So it means that you also need to find out that whether you have this partner,
Yes,
cash flow,
correct.
whether it allow you to do so, right?
But for now, currently, I also opt for top up my premium 20 ringgit.
Oh, okay.
20 ringgit is not that much, but I think I can slowly accumulate to buy more investment units so that my policy could be sustained
Yes.
longer a bit lah.
Yeah, correct. So yeah, I think most of us are doing that as well, right? Just like do it like by yourself on that part.
Correct.
So it means that you can do it voluntarily without the insurance company asking you to do so, right? Yeah.
Okay. The next one is we have one question for Vivian. This person have experienced financial difficulty during pandemic. Right? It affected many people, and this person he requested for premium holiday for his policies. Can he know how this will affect his insurance policy in the future? And perhaps also you can share also what is premium holiday for the audience benefit.
Okay. I'm so sorry to hear about your situation. Right. When you are on holiday premium, it means that you are not paying your premium at a certain period of time, maybe 6 months, right? So when you are not paying on your premium, so means that there won't be any like the premium supposed to pay for your unit, right, to use it to purchase the unit in your investment account, to compute into your account value. But due to premium holiday means that stop everything, there won't be any like contribution. It may affect the account value in the long run. However, you can prevent it by making like what you say, premium top up on that part. So and then because of the premium holiday, it means that it will happen that your policy will expire, leaving you without your protection. So this is part of the thing, the impact will impact you. Yeah. So if it's good that if possible, just maybe like what Ewan suggested, top up by yourself, maybe 20 or 50 for the in the coming when you're much more stable financially. Yeah.
Okay, right. And there's another question. Maybe Ewan can answer this. Is it wise to change this person's medical insurance from his current company to another company, to get cheaper premium? I think this is a fair question, quite a fair question indeed, for many people. What do you think?
Okay. I think it depends. Okay. It is also very dangerous to do so because first we have to take consideration is that our medical history. Let's say if you have pre-existing illness or anticipate any specific medical treatments, you should carefully review the coverage and also the limitations of the new policy. Let's say if you have pre-existing illness, probably if you apply for a new insurance policy, the new one, it should have a exclusion on your pre-existing illness. So or maybe they also have this called waiting period before they providing this coverage for you. So in another way is that okay, the waiting period also need to take consideration as well. Like new policy will have a certain waiting period for a specific benefit, like for minor illness probably 30 days, like for major illness probably they have 120 days. But from our experience tell us that if any claim within 2 years are all subject to investigation. So that is the way they the insurance company they will check, okay? They will review and check all the possible claim. So and then of course you have to read up the terms and conditions and also understand the coverage exclusion or any limitation. So and then I think another thing is what else? I think budget is very tricky lah. Okay. I think most of the company they are offering more or less the same of the insurance benefit. It is just that here probably lesser a bit, probably there is a bit more benefit. So see whether or not your insurance coverage you are more specific to what types of insurance needs.
Meaning that at the end of the day, you also need to understand your insurance needs, what you really what you really need on your insurance part. Also look at your life stages as well, right? Like what you mentioned just now.
Then before you switching or considering other insurance new policy, do take note that review your existing first, whether or not you can do some necessary adjustment. Like let's say now the medical plan that you are paying is a bit, the high premium, you feel is very high, then probably you can opt for a deductible or even a co-payment.
I think I have one more point to add is you have to look at cost point also, the cost of getting a new insurance policy. So for every new insurance policy, there is one thing called commission, right, where it's shared with the agent and the company itself. So whenever you purchase a new policy, a part of your premium will be channeled for commissions. And if you keep on changing it, right, it's quite costly because for first few years, you actually a part of it is not in your policy itself, but then it's given to as a remuneration for the agents.
It might not get the coverage as what you want, right? Because there's what even say there's 120 days or no, sorry, it's 22 years to waiting if anything happen in between that when you change from this company to this company. This is one of the not a good idea on that part, right? Yeah. So any question for the audience? If not, we will be wrapping up the session. I hope that our sharing could benefit you and know that now you have some idea what to expect and also whether you want to opt in or maintain on your insurance premium. So if you have any question or any doubts, you can drop us a message here. So we will reply you. Okay, see you guys next time. Okay, bye.